Starbucks is a company that I've had on my watch list for several years now. It's one that I've wanted to own in my portfolio, but the timing and the valuation has never worked out for my portfolio addition. I'm still curious about Starbucks and wanted to evaluate the company for my own portfolio and evaluate if it's better now because in January is the last time I visited Starbucks stock, and at that time I said it wasn't good for me. I didn't like the valuation in comparison to the things they have going on, and they have some pretty big risks that I am not sure if they're solving just yet or if they can solve, right? And the two biggest issues for me are evidence of growing pains, which is significant for a company where the large percentage of its valuation is coming from its growth expectation. So if you're showing me evidence that the business is getting too big to manage and I'm starting to see diseconomies in scale, two pieces of evidence for me have been the menu has been difficult for the company to manage. Too many items. There's been a lot of sold out of inventory, out of stock, and customers have been complaining about that. And customers have been saying that they have stopped visiting because Starbucks doesn't have the items they're looking for. So that's one thing. And of course, when you grow to have more than 30,000 locations that like Starbucks does, that starts to become difficult to manage. And that's why some of the greatest companies in the world um, are the greatest companies because they found ways to manage to grow and still generate strong profit margins, which Starbucks is, right now starting to feel the pains of that. And in the second way I'm seeing that is with their labor relations. Starbucks' relationship with its workers has been worsening over the last few years. And again, that is a sign to me that, maybe you've grown too large, maybe you have too many employees and you can't manage all of them effectively. You need better local management. Maybe you have too many employees reporting to just one manager and you're promoting managers too quickly and they're ineffective. And all of those are signs to me that Starbucks is experiencing diseconomies in scale. So that was in January. But now I wanted to revisit the company, see if the CEO, the new CEO, Brian Niccol, has made progress in improving the performance of the business, or is the valuation low enough now for me to take that chance on the company, even with these signs, and uh, rely on Brian Niccol, the new CEO, to turn things around and improve the company because there is evidence that Brian Niccol is an excellent CEO due to his performance at Chipotle and what he was able to do with Chipotle, right? So that's the big question I'm going to have on top of my mind as I share with you this evaluation of Starbucks. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. And so one thing I wanted to look at is the company's revenue growth over the previous decade and the more recent trend line. And what I see here is a slowdown in growth in the recent 3 years, I want to say. Excellent growth longer term, right? 16.4 billion in 2014, more than doubled to 34.4 billion in 2025 in the most recent update. But most of that growth came before 2023, right? From 2023 till 2025, the previous 2 years, revenue has barely inched higher from 34 billion to 34.4 billion. So something happened with this company's ability to serve customers effectively in the previous few years because consumer demand for coffee hasn't really declined. The industry is doing relatively well. This has been mostly a Starbucks issue, not an industry issue. Another thing I wanted to evaluate is the return on investor capital. And this is especially important when I'm looking at a business that requires large amounts of capital. Opening a new Starbucks location requires a lot of thousands of dollars to open that location, right? Everything that needs to be done to create a new Starbucks location costs a lot of money. A lot of heavy material needs to be moved, a lot of machinery needs to be moved into location. The furniture, everything needs to be set up. So one at a time, right? That's expensive. There needs to be people managing that project, that development, the construction, the management, all of that, right? So when I'm looking at a business which I rank as a heavy capital investment business, the return on invested capital becomes even more important. And that's the case with Starbucks. And unfortunately, the return on invested capital has been moving in the wrong direction for the last decade, from 22.5% down to 11.1%. And that decline has been more dramatic in the last 2 years, from 15.1 to 11.1. This is where I see, again, the tangible outcome in numbers from the qualitative factors I mentioned earlier, right? The diseconomies in scale, where the company's growing too large to manage too many menu items, too many workers, not enough trained managers. And those qualitative things, this is where you see it in numbers. The return on investor capital declining from 15.1 to 11.1%. All right, so now I want to look at valuation, okay? Because what I see for Starbucks is headwinds over the next, I'm going to say, at least uh, 3 months. More likely, it's like a 1 year, 2 year type of turnaround for Starbucks at the very earliest, if ever. So I need to see a valuation that reflects that difficulty, reflects the headwinds ahead. And unfortunately, I'm not seeing that. Starbucks, my intrinsic value calculation has the business worth $76 a share. The current market price is $84 a share. So if anything, this stock looks fairly valued. It would be a stretch, and you can say slightly overvalued would be more accurate, looking at just my DCF valuation. And then when I look at the forward price to earnings valuation on finchat.io, which there's a link for them in the description if you're interested in getting these same charts. The forward price to earnings ratio at 31.65, again, I would say slightly overvalued for Starbucks in the challenge they're facing ahead, with no real certainty that they're going to achieve these turnarounds around their business and the challenges they're facing. So what it looks to me is that this business, the valuation is already accounting for the fact that the new CEO, Brian Niccol, is more likely than not to be successful in turning this company around. So the valuation of the company is already suggesting that the market believes the CEO is more likely than not to turn the company around. So they're giving the CEO essentially full credit for his capability, for what he demonstrated to investors at Chipotle, because he did a great job at Chipotle for many, many years, and Chipotle faced similarly difficult challenges, if not more difficult challenges than Starbucks is facing right now. Remember, they had that whole outbreak where people were getting sick from their food in 2015, 2016, and its revenues were falling by double-digit percentages. And the CEO was able to turn the company around from that bad reputation with consumers and investors, and turn Chipotle into one of the best performing businesses, restaurant stocks in the market, right? So stock market investors are bringing that performance from CEO Brian Niccol into Starbucks stock valuation. That's my assessment here. And so for me, the valuation is not attractive enough. So I'm going to keep Starbucks stock rated as a hold for now, and I'm not going to be buying it for my own portfolio. But I am watching it, and if the valuation should decline, if the stock price should fall to the mid to low 70s, I'm going to be a lot more interested in Starbucks stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.